market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, tech earnings and U.S.-Iran talks driving the markets yet again, with tomorrow's U.S. jobs report also in focus. Now, plenty to discuss with Arend Kapteyn from UBS Investment Bank in just a moment. But first, investors really digesting a wave of company earnings, which have tested the strength of AI optimism. SoftBank reported a smaller-than-expected decline in quarterly net income after high-flying U.S. memory storage stocks SanDisk and Western Digital failed to meet lofty expectations. Well, let's get more with Neil Campling, Bloomberg's senior strategist. Neil, I have three questions for you. It's basically earnings, Google, and SpaceX. Sure. But if you start with the earnings, I mean, it feels like every day there's a bit of a pull, and pull back, depending on what we hear from them.
Indeed it is. So SoftBank, the big headline beat comes in because of the investment gain from the Intel being up 300% in the second quarter that it reported to. Western Digital and SanDisk, effectively, this is a bit of a travel and arrive. Let's remember that SanDisk is the best performing stock in the S&P 500 year to date, up nearly 500%, had been at one point up more than 800%. Yeah. But the guidance is poor relative to expectations on the sales line. So that is certainly a concern. So there's a reset there in terms of the memory space. So, as you mentioned, there's many questions as there are answers in this space currently. Yeah, we're not sure exactly in terms of valuation. We'll ask Arend in a second. What's your take on, we've had huge changes actually yesterday at Google. What does it tell us fundamentally? This tells you that there's a fight for talent in the AI space. Now, it was mentioned yesterday that these changes at Google were significant. So significant, it was literally like the Rolling Stones, Keith Richards and Mick Jagger leaving the band to form a new band. Seismic changes. So there is this battle for who can be talent. And of course, partly that is remembering that OpenAI lost a lot of talent before, and born out of that was Anthropic, for example, as perhaps the most powerful AI frontier model. So this is management changes is something that's a big focus in Silicon Valley. And then, I mean, it's actually quite a big day for SpaceX, because SpaceX investors bracing for billions of dollars worth of stocks becoming available for trading today. That's right. And what this actually means is that for some of the short sellers that wanted to borrow for the stock, the cost of that is likely to be lower as more stock becomes available. Yeah. We saw into the earnings print there was very little stock available for those short sellers to borrow. So that actually could create more pressure for the stock as some of the hedge funds potentially will question the long-term risks, if you like, of the SpaceX model, because there are many questions, again, on valuation and the future hopes that Elon Musk has for the company. Yeah, and to put it bluntly, we've just never seen an IPO like this. So thanks so much, Bloomberg senior strategist Neil Campling. Now let's get more with Arend Kapteyn, Global Head of Economics and Strategy Research at UBS Investment Bank. Arend, there's a lot to talk about. I know we'll have a full debrief in a second from our Paul Wallace on the ground with Hormuz. But when you look at these fighting forces, I mean, how much of your time is actually spent on AI valuations? How much is it on data in the U.S. and what we're hearing from Kevin Warsh? And how much of it is actually geopolitics? So a lot of it's on AI, but not necessarily on the AI valuations, right? I think what's been interesting about the CapEx build-out, so everyone gets excited, the CapEx numbers are up, that it's almost all memory, right? So if you look from it, because I'm an economist, I look at what does it mean for GDP growth. It actually looks like about 60% of the CapEx build-out is memory prices, and next year it's like all of it, right? So memory spend was 14% of all the CapEx last year. It's going to be 89%, I think, next year, right, of the total cap, like the 1.2 trillion number, right? It's a massive number. But the implication of that is that it will generate no growth. Right, so you're not actually adding compute if it's all just a price effect from memory. And so I think so you can then sort of reconcile things, because you can look at the S&P and say, well, no wonder earnings for the whole supply chain are good because we've got a big CapEx number. It's a nominal number. But if you look at what kind of activity it's generating, it's not, I think we're going to see the contribution sort of roll over the next couple of quarters, because you need to start increasing the units of memory. And so that's happening also, but it's not happening, I think, as fast as people sort of penciled it. But, Arend, I mean, CapEx, there has to be demand. I mean, it feels like this is a bit of a race, right? Yeah. In the past, and we used to talk about it, for example, oil drilling. I mean, this is CapEx that took time and that was well thought out. Yeah.
Are we moving too quickly on this capex?
So it's not clear. So our tech analysts are sort of quite relaxed. So obviously, the big debate the last month or so has been about, going to cheapen open source models, and isn't that going to reduce, demand or revenue for the frontier labs? It's sort of unclear because we're at the very early stage of the rollout. So, what you see now is the reason everyone's getting concerned about token costs is partly because as you start to implement it and it doesn't go to sort of seat-based pricing but user-based pricing, you have to sort of start to look at the cost relative to what you're getting out of it. And I think, companies are in the very early stages of that. So I think where the optimism comes from is if, only 20% of firms have actually implemented AI in any degree, you've got a lot of runway here to sort of for the demand to go up, even if the prices come down. So I think it's not that clear yet that that the capex is sort of overdoing it, especially if all the build out of the capex is just prices and not volumes.
Arend, keep it there because we're going to also get a debrief from Paul Wallace. Iran says it's reached an agreement with Oman on a proposed shipping route through the Strait of Hormuz. Now, an Iranian Foreign Ministry spokesman said a joint statement from Tehran and Muscat is in the final drafting stage. President Trump has suggested an agreement is close.
I'd rather make a deal because I don't want to kill people. I do not want to kill people. But at some point we're going to... We were set for the biggest attack of any attack, and we've hit them very hard for the last few months. But we were all set for the biggest attack since World War II. And they called me and they said, please don't do it, let's talk. And then they said, we never said that. You know what? The fake news knows they did say that, but we are talking. Let's see what happens.
Well, for more, let's bring in Bloomberg's Middle East editor, Paul Wallace. So, Paul, good morning. Iran, Washington, and Oman are all talking. How close are we actually to an agreement?
Francine, we're certainly close, and it's certainly possible that we get something today. But I think what we're waiting for right now is for Oman and Iran to announce a deal over the Strait of Hormuz, a deal that would essentially partially reopen the waterway. It wouldn't be a full reopening, but it would be some kind of 60-day deal to get more traffic moving through it. Iran has said that they've essentially agreed on a draft, the two countries that is. However, we've still not got full confirmation of that, the final thing being signed either by Iran or Oman. It's possible that Iran's Supreme Leader, Mojtaba Khamenei, who's been in hiding for the past few months, still hasn't agreed to it. We don't know for sure, but there are some signs within Iranian media that, we still need his consent, and that could take time. In this war situation, Iranian officials, even the likes of the foreign minister, take a long time to get any answers from him because he's essentially out of contact, and getting message to him involves runners and people shuttling back and forth. So that could be what the delay's down to. And then if they do announce they've finally got a deal, we have to see if it's acceptable to the Americans. They will obviously pass it very closely for the detail, as will the energy and shipping industries.
Paul, thank you so much. Bloomberg's Middle East editor, Paul Wallace, still with us, Arend Kapteyn from UBS Investment Bank. Arend, when you look at, and this is part of your core conviction, right, is that if you look at the energy markets, if you look at trade, everything's still disrupted. Yep. So what's your base case, of the kind of impact this has on the price of oil and inflation?
Okay, so it's disrupted when you look at supply chain stress indicators and things like that, right? It was showing up in the soft data. The soft data is actually rebounded, and it hasn't shown up at all in the hard data. And the financial conditions are super easy, right? So the market just doesn't seem to care. So we have a real tension, I think, between seeing the disruption and not really seeing it in the data, or basic behavior not really changing as a result of the disruption. And part of that is the optimism about the deal, right? So that's sort of now. The longer this goes on, you do accumulate more and more inflation, right? So of course, it helps that oil's come down from a recent peak of over 100 back to sort of 80. But at these levels, we're going to get a more elevated CPI print again next month in the U.S., and none of that's helpful for sort of will the Fed hike or not debates, right? So we had sort of our premise was that the data flow is increasingly disinflationary. We expect unemployment to go back up. We basically, we think we're going to get, that's a pretty benign data, but we also get the BEA revisions going to lower inflation by 20 bips.
So by the time you get to September, if it were just down to the data, I don't think the data flow is supportive of the Fed hiking. But with this energy sort of uncertainty sort of lingering on, it's very uncomfortable because it feels like you don't have a clear route out of sort of the high inflation prints.
But, so I've been trying to think back at, what we were thinking 2-3 months ago, which was people were really concerned that the price of oil would go to 110, 120. That hasn't really come to fruition.
Yeah.
And part of it, and we're not sure why, is China, right? China has just been consuming less. So is this a weakness in the economy, or is it that they found new routes?
No, I think it's not a weakness because it's like it's a complete drop. Like the conflict starts and suddenly they consume 5 billion barrels a day less. So that's a quarter.
Like half almost,
that's like it's like a quarter of the total shortfall, but it's like a half of the shortfall if you think of what's getting out through the pipelines and et cetera. So were it not for China, I think we would have higher prices. Now the question then is, well, how long can they sustain that reduced level of oil demand? And that's unclear, right? So I think the reason we're not seeing stronger inventory drawdowns, which ultimately then would get you sort of into tighter markets, is in large part, I think, at this stage, China.
Okay, so what do you make of Kevin Warsh so far? The bond market is giving him a very clear signal.
Yeah, so the problem is he doesn't say anything in the press conference. So his first meeting, I think 5% of what he said was policy relevant. Powell used to average about 27.
Yeah.
Okay, his second meeting, he was about 9%. They got a little bit better. But the problem is everything he says is hawkish, right? So, and it's funny that, he then says, well, I'm just going to listen to the market. But, of course, the market is partly responding to the hawkishness of the little that he does say. So I think at this stage, it's sort of difficult to read. So our view on the Fed is that if you look at the voters, then it's probably 8-4 or 9-3 in favor of not hiking. But the problem is that those that want to hike feel stronger than those that don't. So if Warsh wanted to hike, then I think he could persuade all of them, and they could hike in September. But then again, it's down to the data. We're going to get 2 labor reports, obviously one tomorrow. If unemployment ticks back up, then I think the setup into September is pretty interesting because 11 out of the last 15 reports going into the September meeting have been weak reports. Coupled with lower inflation, why are you hiking, right? So I think I think the market is obviously understandably confused, as are we, but that's sort of right now how we're thinking about it.
And what are you expecting tomorrow?
So it's 70K on payrolls. I think more important than the payroll print is going to be the unemployment print. We've had basically 1 million people leave the labor force since January. It's the largest drop in labor force participation basically since World War II outside of recessions. It's completely inexplicable. It doesn't jive with any of the other data, and it's happened a few times in 2013, 2015. So that data doesn't get revised, but it does have a tendency to sort of bounce back up a little bit. So if you drift back up, from 4.2 to 4.3, then rather than going down to 4.1, I think 4.1 would be very uncomfortable. I mean, I think then the likelihood of the hikes goes up materially. But because this is a sort of an unexplained drift lower in the participation rate, we think it ticks up. And if that happens, then I think the market will price out a little bit more of the hikes.
And we can't tell yet whether this is, AI related. There's nothing to point to
nothing
why this
in the, when you look at the Challenger data, a very large percentage of the layoffs is now attributed to AI, but the Challenger data is only about 5% of the flow. And there's a lot of AI washing because basically people haven't figured it out.
Yeah.
You've got your target, so I think that's partly what's going on. It's really, if you look at the sort of the nominal numbers of supposed AI layoffs, they are tiny relative to the monthly inflows and outflows in the labor market.
And Arend, I guess it's difficult to know whether it's because you're spending so much on CapEx that actually you need to save somewhere, and so it's the entry-level jobs, or whether it's productivity that you don't need those jobs anymore. Yeah.
So I think that's going to be a very difficult trade-off. So the the way I sort of think about it is it all depends on how much of each job you think you can actually replace, right? If you can only replace 20-30% of a entry-level job, it's still not that easy to cut people because you have to reorganize your entire workflow, put all the 30% bits with one group that you can cut, leave all the 70% bits. It's not that easy, especially if you have smaller firms or smaller teams where the tasks are not transferable between the teams. Right, so I think we're in the figuring it out phase. So all the surveys say that the firms are experimenting, they're trying to sort of, and it's not just about the cost at this stage, because if you're going to compare, your token usage, you also have to figure out, well, what is the revenue I'm getting for that, right? And so you sort of have to do both at the same time, and it's really difficult, I think, to actually measure that.
Arend, what do you know about the UK? I mean, so we're all watching the social media videos of the Prime Minister. We're waiting for that budget on the 28th of October. Yep. I mean, the Chancellor feels like he's going to spend more, but otherwise,
it feels that way. I mean, it's got a lot of commitments that need to be funded. So far, if they adhere to the fiscal rules, then I think the market will breathe easy. But I think the market will want to wait to see that budget.
So nothing until then.
Nothing until I think it's very difficult. Like the problem is it needs to add up, right? And so I'll give you one data point. So this week, basically they said we're going to leave more money in the regions, right? You get to keep all your own revenue. The problem is they already keep all their own revenue. There's massive transfers from the south of England or south of the UK to the rest of the country. There are massive fiscal deficits if you go through the regions, up to like 22%. So. It's not clear what that means. Like, it doesn't make any sense, at least just looking at the numbers. So I think it'll get clarified if we get a budget and you see the sort of proper costing of what they're promising to do.
Arend, thank you so much, as ever, for joining us. Arend Kapteyn, a global head of economics and strategy research at UBS Investment Bank. Now, coming up, global data center demand helps boost earnings for Zurich Insurance. We'll speak to the chief executive next. This is Bloomberg. Welcome back, everyone. Now, Zurich Insurance has reported a 13% gain in profit for the first half. The Swiss firm saw growth across all businesses, boosted by global data center and energy infrastructure demand. Now, we're joined by Mario Greco, the chief executive of Zurich Insurance. Mario Greco, as always, a great pleasure to speak to you. Now, what is the exposure so far to the wildfires, and actually what impact are you seeing from it?
No, good morning, Francine. First of all, my pleasure to be in the show this morning. We don't have any material exposure at the moment with the wildfires and with the current situation. But we know well wildfires from our experience in the US and Australia. And we are prepared to support customers should our customers be involved in that. We know prevention, we know mitigation of wildfires. This is something that, unfortunately, we are kind of expert of.
So, Mario, overall, and I want to get into the data centers in just a second, but does it mean that actually certain of your competitors will also be able to, will have to stop insuring certain parts? I mean, because of climate change and what we're seeing, does a larger, proportion of the economy become uninsurable?
I would not say that it's uninsurable. I would say that the cost of this insurance might be higher over time and could reach levels that might not be interesting convenience for the customers. But in terms of availability of insurance, at least speaking for Zurich Insurance, we will definitely continue to provide coverage to customers for weather events, for natural catastrophes, at the right price.
At the right price. So you've had a good set of earnings boosted by this global data center demand. How much more infrastructure do you think we'll need for data centers? There's concern about, the fact that we're spending a lot and we don't see revenue. Do you have a projection of how much demand could grow? Oh, I think we've lost you. Mario Greco, can you still hear me? I think we have a little bit of technical issue, and that's never a good thing when you're trying to speak to a chief executive about some of the earnings that they've put out. So I think we'll try and go back to Mario in just a second. But Siemens, in the meantime, has raised its earnings expectations for a second time this year due to a surge in data center spending. Well, the chief executive, Roland Busch, also data center spending, has been discussing the outlook with Anna Edwards.
These are two pieces. One is our automation business and our software business, and both are really firing. So our automation business had an order intake increase of 11%, grew by 7%. So we see a good momentum there that comes with a good conversion. And our software business is very strong. It grew by 11% if you took our total Siemens digital business, software and services, it grew by 15%. So we have a growth momentum, which obviously translates also into good profitability.
And what about the competitive landscape? I'm thinking in particular about factory automation. There are Chinese competitors who are in that space, and I wonder how competitive the landscape is right now.
So we are very competitive also in China. You know, we developed and launched new Chinese products. The first 16 landed in the market, another batch of 26 we launched early this year. They grow in the mid-20s percentage points. So we are winning customers, we're winning new customers, we're winning customers back. So automation business is doing in China very well. But then the rest of the portfolio globally as well. We see a pickup also in the machine business, also in China, which helps us also on the high-end side, where we see our core portfolio of automation landing very well. So therefore, in total, we did our homework in developing really super competitive new products in all markets, by the way, in China, of course, in particular.
Okay, so standing up to the competition in China, then, Roland, let me ask you about the data center build-out and the ways that the Siemens product lineup is able to supply that. How sustainable is the demand that you're seeing in connection with the data center rollout?
So let's briefly talk about the impact of data center business. So again, this is a massive investment which goes there. I come to your question in a second. That helped us also growing our smart infrastructure business. For example, electrification business grew by 20%, electrical products by 18%. But we had also a growth from our automation business as well, which was pulled also in this one. So now you understand that we have, of course, the electrification piece, low voltage, medium voltage, where we have a huge demand, which we can serve. But then AI factories, they go more and more into industrial PLCs, where we have a strong offering. We're also adapting our functionality, we can use it. And then after all, if you want to build new data centers, you want to build them fast and super efficient. So we offer a digital twin of a whole AI factory or data center, which you can optimize in the digital world and then build it, which is definitively a benefit for our customers. So it's a very strong offering here. And then it goes into other technologies like 800 volts DC, so direct current. We launched new products, DC products, switching products, which we have in the market. They get a pull. And then when it comes to liquid cooling, the whole situation changes again. And we have an offering there also for things like solid-state transformers. We're working on that. There are new technologies. And we are working with NVIDIA for a blueprint of these new AI factories together, again, using our digital twins, and we are putting products behind that.
Well, that was the Siemens Chief Executive Officer Roland Busch speaking to Anna a little bit earlier on. Now, stocks broadly flat. There's quite a lot of weakness in the technology sector, but again, that is compared to what we saw in the last couple of days. Investors awaiting developments in the U.S.-Iran talks and looking ahead to key U.S. jobs data on Friday. Look, the pause in tech rally really comes as investors now reassessing valuations after AI-related shares are rebounding from last month's sell-off. Coming up, we'll have plenty more, of course, on AI and infrastructure, given the results we had with Zurich, of course, insurance. This is Bloomberg. Good morning, everyone, and welcome back to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Renewed weakness in chip makers weighs on market sentiment as investors look ahead to key U.S. jobs data. Iran says it's reached an agreement with Oman on a proposed route through the Strait of Hormuz, raising the prospect of energy flows resuming. Plus, Bloomberg learns major hedge funds were targeted by hackers in a wave of attempted cyber attacks in recent days. Now, let's return to our interview with Mario Greco, the chief executive of Zurich Insurance, after the Swiss company reported earnings. Mr. Greco, thank you so much for being patient with us. I'm delighted to have you back to talk a little bit more about your earnings that were really boosted by AI infrastructure and AI data centers build out. How much more can we build?
We believe there is still a lot of demand out in the market to ensure construction of technology, energy, pipelines. The world is in a transformation, and construction and infrastructure is a very hot sector. And we, as an insurance company, have been proud of being specialized on that for decades. And now we can deploy all our knowledge and expertise in following the customers on that. Now it's going outside of US. So we have lots of projects currently in Europe, in the Middle East, and in Asia. And we expect this demand to even get hotter over the next couple of years.
Yeah, and just to make sure that all the viewers understand, it's basically because Zurich offers these specialized insurance products for large, complex projects. So is that going to be the bulk or the most significant growth in terms of revenues going forward?
It's going to be one part of the growth. We also see a lot of growth in middle market and specialties outside of construction. But this is a very significant, I mean, to give you a size, our total property and casualty revenues are a little short of 40 billion. And the construction business in H1 was in the 1.3, 1.4 billion revenues ballpark. So it is significant, but then the rest of the portfolio also is growing, especially with mid-market customers, SME customers, and rest of specialties.
I know you're doubling down on this specialty insurer with the acquisition of Beazley. On Wednesday, Beazley disappointed actually on earnings for a number of things, including some of the large payouts because of cyber risk exposures. What does it mean for your appetite with Beazley? Are you having any second thoughts?
No, honestly, the vision to create a merged unit on specialty with Beazley is a long-term vision, it's a strategical vision. I think the portfolios can complement each other, and we can create a very strong and stable, big specialty writer. So they're not dependent on the quarterly or half-year results in any way, positive or negative.
Mario Greco, to what extent are you being impacted, that Zurich is being impacted by the war in the Middle East?
Not directly. We don't have a real exposure there. We don't have a marine business, so we haven't been impacted by any damage to ships, to fleets out there. Indirectly, for the financial market, movements, we've been impacted as everybody else, but we do not have a direct impact, and our accounts, I think, show that.
Mario Greco, just a final question, because there's also been some ongoing enforcement proceedings by the Swiss regulator FINMA about, some sales bans, basically, as related to policies in Swiss corporate life and pensions unit at Zurich. How long do you expect that to last?
That I don't know. That's a question for FINMA. We did what we had to do. So we changed the management, the organization, the structure of the company. We have been acting on improving the systems, the controls. Then it's up to FINMA to decide when they will find all these changes proper to the standards that FINMA wants us to have. We acted as quickly as we could have done it.
Thank you so much, Mario Greco. As ever, it's a great joy to speak to the chief executive there of Zurich Insurance. Now, Commerzbank has unveiled a fresh share buyback. The chief executive, Bettina Orlopp, is trying to show that her strategy delivers strong returns, while Italian rival UniCredit prepares to expand its stake in the German lender. The two banks are set to kick off what could be months of discussions about the bank's future, while Orlopp spoke to us a little bit earlier.
We have talked after every quarter, UniCredit and Commerzbank, because there are a very large investor since a couple of quarters. So it's very normal that we have interactions with a very significant shareholder, and that will and these meetings will continue for sure.
Yeah, I just wondered what your relationship's been like with Andrea Orcel, Bettina, because we know that he wants to speak with the German government and the Workers' Council, and made no mention of Commerzbank management when in the recent comments.
Well, first of all, I think we are both. We're both committed to increase and maximize the value for our stakeholders. And I think that is a good basis for meetings, also meetings between the two of us.
Mm-hmm. Well, what will your main other asks be then in the takeover talks? I'm thinking about keeping the international network, the headquarters, keeping the public listing. Maybe you want some job guarantees.
I understand the interest in that, but you will understand that I think things like that should be discussed first between Commerzbank and UniCredit, and then we will definitely come out to the public to share more details on it. For the time being, I think it's important, A, that we deliver and that we continue to deliver against our targets, and B, that we are in constructive dialogue with UniCredit to figure out also some technical details, but also then how we organize the phase ahead of us, but also how potential target pictures could look like. And the best thing to do that, and the most value accretive thing to do it, is to do it jointly, and that's the basis.
Well, that was the Commerzbank Chief Executive, Bettina Orlopp, speaking with Lizzie a bit earlier. Now, we're joined by Paul Davies, who covers banking and finance for Bloomberg Opinion. Paul, I mean, my head is spinning. So now they're maybe looking at teaming up with UniCredit. Like they used to be, the two chief executives didn't used to talk, and now it feels like there are warmer connections.
Yeah, well, they kind of have to, really. It's when you look at where we are with the deal, most people in the market assume this is done now. Okay. Like UniCredit has won. I mean, so they've got, with the tender offer and with their derivatives, they've got, I think, 48% of the shares. That would give them, a majority at most AGMs because not everybody votes. So they can kind of put their own people in charge, over time if they want to. We had a story in Bloomberg News last week that they've got approval now from BaFin to go over 30%, so to take on the rest of the shares that were tendered. That goes to the ECB. They should probably give approval by sort of October. And then, after that, the UniCredit will have to consolidate Commerzbank. Now, the interesting and slightly awkward thing there for a while is they then have to supply all of the capital to run the bank, but they still only get 48% of the earnings. So they're going to be in a slightly costly situation for a while. But, Bettina Orlopp, as well as she has done over the past couple of years, under pressure of UniCredit as an active shareholder, has no choice now but to kind of be a bit more warm.
Paul, do we understand exactly what this takeover looks like from the UniCredit side? She was very coy on job cuts and things like that. Yeah, so she really wants to protect the international network, I think. That seems to be the main difference of opinion between, Andrea Orcel and UniCredit and Bettina Orlopp and the Commerzbank team. When UniCredit get control, they will almost certainly get their way on this. I mean, it's an in-Germany deal. It's a deal between HVB and Commerzbank. It's not a kind of a pan-European cross-border deal in that sense. They will keep Poland, whatever happens, mBank, and they still need to get some approvals for that. But the rest of it will probably ultimately come down to what, Andrea Orcel wants to do. In Italian banking, like domestic banking, there's loads of M&A that's going on, trying to outdo each other and buy stuff. Like, where are we?
So, it's all finally settling down a bit. I think, Intesa San Paolo has this bid for Montepaschi, Banca Montepaschi di Siena, which has been, the centre of a lot of this kind of consolidation for a long time already. Over the weekend, we had Crédit Agricole, a big shareholder in Banco BPM, saying, a proposed merger between BPM and Montepaschi was not going to happen. BPM has kind of now said the same thing. Luigi Lavaglio, the great, the man who kind of, is never quite defeated, CEO of Montepaschi. Who came back against all odds. Yeah, keeps coming back against all odds. You can never quite count him out. But, it does look like Intesa is probably going to win that deal as well now.
Earnings overall for European banks, I mean, Italian, German, they've been okay.
Yeah, they've been pretty good. I mean, I think revenues on average have risen, much faster than costs, even though costs have been a bit sort of looser than people hoped. But, the profits have improved everywhere. Capital is strong. Balance sheets are clean. Everything looks, quite decent.
Now, we're a little bit obsessed. I think it's our most read story on the Bloomberg terminal about these hedge fund bets in the wake of the near collapse of Situational Awareness.
Yeah.
Like, that was an incredible story because Citadel swooped in.
Yeah.
And it's doing very well on the back of it.
Yeah, I mean, so one of the things I've been looking at a lot over, earnings season and just beforehand is just, the amount of leverage in the stock market at the moment. A lot of the big banks, particularly in the US, have been really leaning heavily into prime brokerage, which is lending to hedge funds. Obviously, retail investors in their margining accounts, there's like record leverage in sort of margin trading as well. I think, both Jamie Dimon of JP Morgan and Brian Moynihan of Bank of America kind of commented about this yesterday as well. And one of the things I've been looking at a bit actually is our traditional way of trying to judge this is by looking at the amount of debt in relation to the value of stock markets. Yeah. And, on that measure, things don't look too out of whack with the past. But a couple of people who I've been speaking to are saying, look, actually we should think about debt against GDP as we do with all other kinds of debt. And when you do that, you start to realise that hedge fund leverage in particular is way higher than we have ever seen in history, and the same with margin debt as well. And that's kind of makes things a bit more worrying, I think.
Yeah, worrying in terms of systemic, or is there a specific, not all hedge funds, you have small hedge funds, you have big hedge funds. Is there a particular area that we should worry about in these hedge funds?
I mean, I think primarily it's about, stability of the stock markets and, and the scope for like high levels of volatility and sharp corrections. I mean, we had a taste of that over the past sort of 6 weeks with, a lot of leveraged investors coming out of the Korean market, this situational awareness situation, and the important thing about that is, that sell-off could have been much worse if it weren't for Citadel coming in and basically taking out the book and stopping a kind of, potentially a worse fire sale. So it's about stock market volatility first. That can feed into like more economic weakness if it goes on for quite a while. But the real issue for financial crisis is always, bigger problems with credit, supply of credit, that sort of thing.
Paul, as always, thank you so much. Paul Davies there from Bloomberg Opinion. I urge everyone, I read all of Paul's columns. They're great. We'll push them out on social media. Of course, you can find them on our website. Now, Bloomberg has learned that hackers launched a wave of sophisticated attacks on Wall Street firms, targeting information systems at major money managers. Point72 Asset Management told investors that it had been attacked, but there were no initial signs of stolen client data. Now, for more, we're joined by Bloomberg's Jill Deasy's. Jill, how was the attack carried out? Because it feels like it was coordinated and big, and who else was targeted?
Yes, Francine, so this is actually the really fascinating part of this attack is that these hackers were using primarily this concept called voice phishing or phishing. So the idea here is that they're actually using technology to mimic voices on voice memos or on telephone calls where they're trying to convince employees to actually trick them into releasing sensitive information. So that's really kind of the tactic that we're looking at that's being used here. So in addition to Point72, people familiar have also told us that there were others targeted, including Millennium, including 2 Sigma, Citadel. We haven't heard, some of them declined to comment. 2 Sigma says that these attacks weren't successful. So, a lot going on here, but ultimately does kind of resemble a really sophisticated version of cyber attack targeting some really major hedge funds.
Jill, why are cyber attacks surging across Wall Street?
So I think, Francine, this is might feel a bit obvious here, but ultimately it's really kind of comes down to some of these advances in technology and artificial intelligence. We talked to experts who said that, cyber attacks that maybe in the past would target, 50, places at a time now are capable of targeting, 1,000 or so. So you're looking at that development of this technology that's really enabling these types of cyber attacks to get, one, more sophisticated, but to also target a broader net of places, including obviously several major financial firms.
Jill, thank you so much. As ever, Jill Deasy's is there with the very latest, of course, on these pretty incredible cyber attacks. Now, coming up, a last-minute say for Gianni Infantino as he so far survives the FIFA World Cup sell-off scandal. We'll have the full details next, and this is Bloomberg. Welcome back, everyone. Now, as we await news of a possible deal between the U.S. and Iran over the Strait of Hormuz, there is also hope for a peace agreement between Israel and Hamas. Well, Mark Champion from Bloomberg Opinion says the Middle East could look very different by the end of this year, with Israelis and Palestinians both taking part in crucial elections. Well, Mark joins us now. Mark, thank you so much for being here. It's true that, I guess because of everything that's happening in the Middle East with Iran on geopolitics and the Strait of Hormuz, we're just not spending enough time on what's going on between Israel and Palestine. Are you hopeful for some kind of movement forwards?
Well, I think you have to be deliberately optimistic because the current status where it's kind of got stuck since the ceasefire and the Trump 20-point plan last year in October. So we're kind of stuck since, and the Israelis the IDF is gradually creeping forward, occupying more of the territory. Aid isn't really getting in. There's enough food, just about, but otherwise nothing. And it's utterly miserable for 2 million Palestinians who remain there, civilians mostly. And it's not really a sustainable outcome. So, the sort of logical end to that, which some members of the Israeli government, espouse, is basically to make it uninhabitable, drive the Palestinians out, and, effect what, they call a voluntary exit, but it amounts to ethnic cleansing. So the alternative is that you try and get some sort of wider agreement, bring the Arab world in. Yeah. That means Israel has to move. That's not going to happen until after elections. So, I think the reason to sort of hold out hope is that, there will be, we think, some change in the players involved, some change in the political landscape, and you may start to see some movement.
But this is not in the international community that, frankly, has almost been nowhere to be seen. Is it because of elections in Israel?
I think it's because, essentially, Donald Trump took possession of the issue and then got distracted in Iran. So, he organized this peace plan, built the Board of Peace, and the Board of Peace has been working, but it's very, very difficult to bring, sort of irreconcilable positions together. The other point of sort of some hope is that, Hamas just appointed a new leader. That's not great. He's very much the continuity leader, used to be Yahya Sinwar's deputy. On the other hand, they have said, okay, we're willing to, disarm in principle. Lots of, differences with the Israelis about what that entails and when it should happen and who should move first and all that sort of thing. But it's the first time that Hamas has ever said we will disarm. So, another reason to try and get some, leverage into that and to sort of use it and try and get towards some better outcome.
You also wrote that, like Iran, the Ukrainian war has a potential to draw in the wider world. So what's your outlook on that conflict?
Well, I mean, increasingly pessimistic, unfortunately. The Ukrainians, very briefly, they've had a good year, essentially. They've done well on the front lines. They've, despite, against all odds, they remain outgunned and outmanned. And yet they have been, been able to do a lot. They've also begun deep strikes into Russia, which they weren't able to do before. All of this is quite sort of positive from their point of view, and you would hope that that would open a window of opportunity. But just at the moment when that is there, and you can see pressure beginning on the Russian economy, etc. Just at that moment, they've run out of Patriot missiles, and because of war in Iran again, they aren't available. We're going into a winter when, as in previous winters, the Russians will try and make it so that there's no power, no heat in the Ukrainian cities. This time they may well be able to succeed because, the Ukrainians now have no defenses against ballistic missiles. So it's somewhat depressing. On top of that, there is some discussion of whether the Russians may mobilize again in after the elections in September.
Mark, I guess there's a danger that when you look at the stock market, you think that nothing's going on. And I remember reading this piece by John Authors just a couple of weeks ago saying, even in the 1920s, 1916, 17, the stock market was fine and geopolitics actually took over and we had a world war. Without asking you whether there's a risk of World War III, do you think that conflicts could really widen worldwide, into something that we should really worry about?
I think we should be worrying about it all the time. I mean, that doesn't mean that there's a probability that will happen anytime soon. But the thing about world wars is nobody intends them. Nobody plans for them. They happen because governments in generally major powers get themselves into positions they find it difficult to extract themselves from, and you see that happening all the time. Look at Putin in Ukraine. Look at Donald Trump in Iran. You're a great power. You get yourself into a position it's hard to extract yourself from. Rationally, you need to, but then you tend to keep doubling down and escalating. And then that affects other countries, other great powers that get involved. Look at China. They're trying to, keep a light fingerprint on these various conflicts, but they're there. They are supplying the Russians and the Iranians with what they need in order to make the missiles that allow them to continue the war. Look at the North Koreans. So it's, all of the kind of pieces are there. Doesn't mean that they're going to fall together, but yes, we should be worrying about it all the time and trying to make sure that we don't end up blundering into another wider conflict.
Mark, thank you so much, as ever, for joining us. Mark Champion, our international affairs columnist with Bloomberg Opinion. Now on to football, and FIFA has apologized for what it called errors over Gianni Infantino's failed plan to sell stakes in the World Cup. Well, senior staff say they have reaffirmed their full support for the president at a crisis meeting in Morocco. Well, Bloomberg's Tiwa Adebayo has been following the story very closely. Tiwa, thank you so much for joining us. So what do we actually know about this emergency meeting?
Well, the statement about it was pretty emphatic. The headline here is that members of the FIFA Management Board, including the Secretary General, have reaffirmed their full support for Gianni Infantino in his position as president. I do think it's quite interesting, actually, the meeting took place at FIFA's Africa office in Morocco and Rabat. That says maybe quite a lot about where his support lies. We've talked about before the level of support he has from CAF, which is the African Member Association that's part of FIFA. It does seem like they've really been rallying around him. He's been in Morocco for the last week, actually, and yesterday we saw him alongside the Secretary General of FIFA at one of the Women's Africa Cup of Nations matches. Of course, there is a major international tournament happening right now, so it does seem like there has been a bit of a support rising within the FIFA organisation, but there is still criticism there for him as well. And in the statement, they do mention that Gianni Infantino has apologised to both FIFA's management board and also to those member organisations as well.
Tiara, where does this leave the future of Gianni Infantino, FIFA, and the World Cup? It feels like, it's quite difficult to just put it behind and say nothing's happened, let's move on as normal.
Yeah, well, what we can tell from this, I think, is that he's going to fight for his position. There was perhaps some talk of maybe resignation. It doesn't look like that's going to happen. The statement says that moving forward, they're going to try and find a way for what they're calling FIFA Forward Enterprise. That was the controversial proposal to involve investors. They're going to try and find a way for that plan to develop football and for some of the earnings, perhaps, to go to developing the women's game and other things that were mentioned. So it seems like for now he's going to try his best to stay and defend his position, but still facing criticism from world leaders. We even heard from Mark Carney yesterday, Canadian Prime Minister, saying that he's lost confidence in Infantino. So a difficult position for him.
Tiwa, thank you so much for joining us. Tiwa Adebayo there with the very latest on Infantino. Up next, to Bloomberg Brief, and this is Bloomberg.